Hello and welcome again to UK Property Talk. This is Charles Kelly. I want to talk to you today about the transactions going on in the UK as opposed to just the prices and the sales figures. And of course, we know that prices have been going up, and we were reporting over the last few weeks that prices were still going up. I think it was up, according to some figures, 13% last year, according to the lender figures. It was certainly up in May and June. But the number of transactions, according to the official data, the HMRC data, is definitely slowing based on stamp duty transactions. Now, the property transactions are down 55% on 2021, according to official figures. Now, you might say, well, yeah, that was because of the bubble created by the government on this mad stamp duty rush to buy things. And yeah, that is true. That was another government bubble that they created. But they're also down on a monthly basis 3.1% based on previous months. Now, you might say, well, that's the season, but these are seasonally adjusted figures. So the seasonally adjusted figures estimate of UK transactions between June in June 2022 was 95,000 transactions, 54% lower, 54.3% lower than 2021, and 7.9% lower than in 2022. That's May 2022. So nearly 8% down on May 2022, which is quite a big drop. Now I'm going to put some charts up here and figures. You can see this for yourself, but that is definitely indicating a slowdown in the market. Maybe because high interest rates are starting to bite. People can't afford the mortgages that they were able to afford. It could be that, because if interest rates now, mortgage rates have jumped up now from around 1 to 3% now. That's 300% difference. So if you think about a 2% increase on let's say a mortgage of £200,000 or 250, these are quite typical mortgages nowadays, believe it or not. It will cost, borrow on a £200,000 mortgage, 2% extra is going to cost £4,000 a year. That's quite a lot of money. That means to earn that sort of money, you've got to probably go and earn £5,000 or £6,000 after tax just to pay that extra mortgage. That's another £333 a month on a £250,000 loan. It's another £5,000 a year they've got to find, or $416 a month. So the lenders will reverse engineer that and take that into account, and then calculate how much they can borrow. Because now they don't just give you a multiple of your income, now they look at your affordability as well. So that might be hitting the market, that might be preventing people from buying, maybe they're losing the property that they thought they could get. I mean, there's still a lot of money around, there's still a lot of money being pulled out of houses on equity release. There's still people with money and able to borrow money, and money being passed down from parents and grandparents, etc. But it is definitely slowing down. Now, at the same time, the banks, the interest rates are going up on credit cards. They're jacking up rates by 2% on a NatWest credit card, and they've said that the Bank of England have said that the number of people using credit cards has actually jumped significantly. So that's a bit of a worry for the economy. But the NatWest has jacked up their rate for credit cards. But they said, Bank of England said, borrowing on plastic has risen by 12.5%. So it's the highest in nearly 17 years. So a lot of people are falling back on their credit cards to buy things like food. So it's not surprising that things are slowing down in the property market. But NatWest have not passed on these interest rate rise figures to savers. They've kept the savings rate the same. I've been into the branch before it closed down. Literally closed down. They're closing 2 branches in my town, NatWest and HSBC, which actually does create opportunities for property investors, because these are usually great big buildings with offices upstairs that used to house 40 workers. There were like 30, 40 staff in each branch. Now that's all centralized. They don't need those people anymore. They don't need the branches anymore. They're trying to move us into cash, aren't they? Get us away from using branches and taking money out and that sort of thing. They don't want us to have cash. They want to just have digital money. But the banks, I think it's scandalous that they haven't passed on these interest rate rises to savers. But what is it doing? It's forcing them to look for better ways of earning money, better ways of supplementing maybe their pension, which is maybe not very much. And that's why I think so many people are turning to property. And maybe that's part of the reason where money is coming into property in places like the north, because there are cheap properties up there you can buy with high yields. 10 to 15% is not uncommon. In fact, we're selling properties online in auctions in those places, in those very places in South Wales, the northeast, where people from London are buying these properties, not because they're greedy and they want to be a landlord and that sort of thing. No, they need a better return on their money. They've been earning meager returns in the bank. Their pensions are not doing very well, and they need something else to live on. In fact, I know a guy started off like that and ended up forming quite a nice little business in property management by buying 1 or 2 properties himself and then realizing they needed management and set up a little business up there. Now he's actually made more money than he was making before he retired. So yeah, that's what a lot of people are doing. They've been pushed into property, and I think that is fueling property price rises in some parts of the country. This is not affecting the residential market, I don't think. I think it's affecting those buy-to-let markets up north, where people are looking for a decent return on their money. Now, I'll come back to what you can do to take advantage of the property market in other ways, but there definitely are fears of recession. I mean, Lloyds Bank, who also announced a big program of branch closures, they're setting aside money to cope with defaults on loans. They're expecting a lot of defaults, and a lot of those could be on property. I saw a bank called Metro Bank. Yes, I was at a networking meeting. Metro Bank have pulled out of commercial property lending unless you're an owner-occupier. So they've been a bit cautious about that. And I think lenders are also being cautious on what they lend. The surveyors have certainly been told to be cautious as well with their valuations, because when a loan defaults, then you fall back on the valuation that the surveyor said it was worth, and then they're looking for a for sale valuation. If the surveyor's got that wrong, the lender might not get all their money back. So they've been asked to be cautious. But the Federal Reserve have put up interest rates by another 0.75 quite aggressively as America slips into recession. They've had 2 quarters now. They had 1.6% drop on the first quarter and 0.9% in the second quarter. That's technically a recession, although they're not calling it a recession. But that shows that the biggest economy in the world is slowing down. And when America sneezes, as they say, the rest of the world catches a cold. But in addition, we've got all sorts of other problems. Haven't we? We've got supply chain, we've got 40-year high inflation, we've got gas prices going through the roof again, the war in Russia, Ukraine, food shortages, all these things are going on at once. And in fact, in Germany, they're looking to ration gas, and they could go into a winter of fuel rationing because they need the power for their big industry. But Russia has slowed down the amount of gas going through this Nord Stream pipe. So it's very serious for the West and for the European Union in general. A lot of countries in the European Union are failing. Greece, Italy, these sort of pigs, PIGS. Is it Portugal, Italy, Greece and Spain? They're all in trouble. They've all gone way over their targets for their debt ratio to GDP. It's something, in some cases it's 200%. And Greece could actually end up defaulting again on its payments. And look what's happening in Sri Lanka. They've defaulted on everything. No one wants to lend them money. They can't even afford to buy oil and raw materials for their country. It's now become a kind of a failed state. Now, I don't think we're going down that route quite with Europe, but it looks like the European Union is in a bit of trouble. And I'm glad that the UK is out of it, because it looks like the richer countries in Germany and France are going to have to support the poorer southern nations who've not stuck to the plan. And that's going to that's going to annoy them, isn't it? They're not going to be happy about that, and I don't think they're going to stand for it that much longer. So it's looking it's looking pretty bleak out there. But in times of recession, then opportunities are always there for us. When things really hit the fan and people start losing things, then unfortunately that does create opportunities for other people. And one way you can take advantage of those opportunities is to get some training. Now I'm putting up information about 2 events next week where you can learn about property. One is the Beginner's Property Secrets. I've had a lot of people from here go on to that course. They really think it's very useful. It's great. That's on 7 o'clock Wednesday. It's a virtual event, so I'll put a link up to that. You can learn some of the secrets from professional buy-to-let investors, how to buy property, what type of properties to buy, whether you can use other people's money or not, and different strategies other than just buy-to-let. Now, also next week, there's a live event. This is if you want to go in person up in the Midlands. This is called a No Money Down property event. That means it's focusing on ways to buy or acquire or control property using none of your own money. And that's on Tuesday at 9 o'clock. It's a live event, so register for that. If you can't get along, it's no point, go to the virtual event. But there's 2 events there that I think where you can learn how to get into property, because I think there's going to be tremendous opportunities. In the last few years, it's been a seller's market. We see from those figures from June 21, when the figures were like that, because everyone was scrambling to buy. You were kind of put on a waiting list if you put in an offer for a property. That's going to change. There will be more opportunities, not just to buy properties, but use options, use these strategies that perhaps people don't want to know about in the boom times, but in other times they do. You can also use strategies to help people, to rescue them from being repossessed and losing everything. So tune into some of those events, two events there. And if you're looking for properties up north, I'll put our link up to Open House South Herts, which we have a Facebook page advertising many good deals in the northeast, where you can buy properties yielding up to 15%. And I think there's some tremendous opportunities there. So do have a look at that, because I think there are a lot of people in trouble out there, and particularly people who are perhaps retired, or people that just not earning enough. Inflation is eating away at their savings. What they could buy last year for £90 is costing them £100, or what they could buy for £100 last year is costing them £109, or £1,000 is costing them £1,900. This is what inflation does to you, and it's eating away at your savings as well. Because if your money's sitting in the bank, inflation is eating away at that. It's like you keep money under the bed, and these termites are getting in, eating 10% of your money each year. That's what's happening in the bank, because they're not paying you anything, and then that money is losing buying power every single year. So not only are you not earning any interest, but you're losing money through leaving it in the bank. Now, I'm not suggesting you rush out and buy property or go into the stock market. I think the stock market is like that. It can only go one way. We're going to see a big stock market crash, in my opinion, later this year. Then there'll be opportunities in stocks. But at the moment, get ready for property opportunities by doing the training, so you are ready to hit the ground running when this starts to happen. And it's already slowing down, as we know. The transactions are already slowing down. There's already a sign that there's deals out there. There's good deals in auctions as well. So to get yourself ready, check out those events, and I'll speak to you again next week for Money Tips podcast, and then the property podcast as well. Please like and share this if you're watching it on YouTube or Facebook. Get it out there to people, because this is all good free information for people to help them learn more about property in the UK, and I think anywhere. Property has always been a good investment for me, and in the next couple of weeks I'm going to bring on an equity release specialist who would show people how to pull out money from their property, because that's another thing that people who are slightly older can do. If they've got all this money tied up in their property, they've got no relatives, or they just want to help their relatives, they can pull that money out of that property very, very easily and help to supplement their income and help them enjoy life now, rather than dying and passing it on to the children. You can actually pull that money out and pass it on to them now to buy their first home, or just to help them through education, university, whatever. So have a look at that. I'll be announcing that soon. The guy's on holiday this week, so we'll get him in the next week or so, I hope, talking about equity release. Thanks very much for listening, and have a great day wherever you are. Have a good, safe weekend. Bye for now.